So we're talking oil today, that meeting of oil producers from the OPEC group.
Yeah, that's right. The oil industry holding its breath ahead of Thursday's meeting to see what the world's top oil producers will do about the falling price of oil. Ahead of that summit, non-members of OPEC, Russia and Mexico met with the group's top producer, Saudi Arabia, to try to convince the country to cut back production, but no agreement was reached. Meanwhile, months of falling prices are finally paying off at the pumps as consumers see petrol prices dip as well. Kate Moody has more.
At this petrol station in Paris, a pleasant surprise awaits customers.
€1.20 per litre? I haven't seen prices that low for years.
I think it's good. Even small savings are savings.
Savings at the pumps, but also at home. The price of heating in France has dipped from nearly €900 per 1,000 litres last November to €815 now. The force behind these deals is the price of Brent crude oil, which has plummeted by a third in the last 6 months, dropping to a 4-year low under $80 a barrel. The slide is due in part to an increase in production of shale oil in the US, as well as slowing demand in Europe and Asia. If it's good news for consumers, the low prices are causing headaches at OPEC, the Organization of Petroleum Exporting Countries. Saudi Arabia, the group's top producer, is resisting pressure to cut back output in an effort to boost prices. Even non-OPEC countries have become concerned. Russia and Mexico joined Venezuela and Saudi Arabia in unofficial talks on Tuesday.
Everybody's worried about the price. We agree to keep in contact, and we are going to meet again in 3 months.
No deal was reached, though, sending crude prices even further down on the markets and raising the stakes for Thursday's OPEC meeting. Russia said earlier this week that the collapse in oil prices has already cost its economy $100 billion.
Well, let's take a look at how oil is trading today on the markets. And we've seen the price of Brent crude, which is one of the benchmark oil indexes, stabilise in trading today. It's actually up a little bit, but still below that $79 a barrel mark, which is near the lowest that price has been in 4 years. The Wall Street Journal saying that OPEC members are near a compromise on cutting production, but that's not yet having any effect on the markets. Over on the stock markets now, the boost from stronger than expected US growth has been tempered by some less optimism about the Chinese economy. Over on the Asian markets, we can see the Shanghai Composite still up by over 1%. That's the effect of the rate cut we got from the Chinese central bank earlier in the week. Just the Nikkei dipping slightly into the red.
To the US next, which has expressed concern over the EU's investigation of Google.
Yeah, the US mission to the European Union says it's noted with concern a proposal before the European Parliament to separate search engines from other internet services at companies like Google. Now, the European Commission has been investigating what it believes are anti-competitive practices at Google for 4 years now, but has so far been unable to reach a settlement with the company. The US statement says the inquiry should remain objective and impartial and not be politicised. Several lawmakers in the US have also written letters expressing alarm at this proposal, saying it raised questions about the EU's commitment to open markets. Now, Europe's digital chief has said there'll be no break-up or expropriation of the company, but we'll follow that story as it goes through the European Parliament later. For now, let's move on with a quick look at some of the day's other business stories. And the value of Apple has reached a record $700 billion for the first time. In trading on Tuesday, shares in the company rose to almost $120 apiece, pushing the company over the $700 billion mark. It's now worth 1.7 times the value of the world's second most valuable company, that's ExxonMobil. The company's share price has risen thanks to the launch of the newest iPhone and iPad models. Samsung has sold its defence and petrochemicals arm for $1.7 billion. The businesses are being sold to the South Korean Hanwha conglomerate. The sale is seen as part of Chairman Lee Kun-hee's efforts to streamline the company before handing over the reins to his son, J.Y. Lee. And profits at Hewlett-Packard have fallen by almost 6% in the fourth quarter, but the company's PC business saw revenues rise by 4%, driven by corporate buyers. Chief Executive Meg Whitman announced last month she was splitting up HP's hardware and software businesses.
No, then we all get it wrong sometimes, don't we? Some of us more than others, of course. It's why I love this next story. A slip-up from a senior Twitter executive has prompted all sorts of speculation.
Have you ever accidentally published things on Twitter you're not supposed to?
Not on Twitter, but I've done it on other things by mistake.
That's
Work email.
That's the story I'll ask you about later.
Yeah.
This is proving, of course, that even people who run the company sometimes get it wrong. Twitter's chief financial officer, Anthony Noto, had what's called a DM fail yesterday when he publicly posted a message that was meant as a direct message to one other person. Now, in it, he talks about trying to close a sale by mid-December. You can see it in the lower part of your screen now, this "I think we should buy them" message. It was deleted fairly quickly afterwards, as you might imagine. But rumours are abound in the financial press about what it was that he might have been talking about buying. One of the rumours is that they're looking at the photo app Shots, which is backed by Justin Bieber. Which makes you wonder, I suppose, if Anthony Noto is also a Justin Bieber fan.
Exactly. It's when you write an email about somebody and then you send it to the person. Right?
I still haven't forgiven you for that, to be honest.
No. I'm surprised he's talking to me, really. Stephen Carroll with Business. Coming up for you, the professional rally driver.